In this video, we will show you ICT OTE, the world's most simplest and powerful and profitable trading strategy. We will also show you all the steps from A to Z to take a complete trade and how simple and profitable this strategy is. Also, where to exactly place your buy-sell trades and how to place your entry, stop loss and take profit levels. Also, best profitable times to trade for high win rates and some secretly kept models to improve the win rate. So you will place a buy limit order, hit our next take profit. We have got a large profit. We got 2 trades here. So in total, it's 1 to 18 remarkable risk to reward trade, smart money and big banks buying. Find a change of character or market structure shift. Like to trap traders and then use those traders stop loss as liquidity hunt. Smart money and the algorithm there's a high chance you get stopped out. Before you buy here, what you are checking is third take profit at Fib minus 100. If you are a scalper, this is the golden part. The win rate can be increased by adding liquidity sweeps and targeting liquidity. Combining OTE with daily bias. So what is the ICT Optimal Trade Entry, OTE? Now this is the most simplest and profitable trading strategy in the world. It is based on Fibonacci retracement levels and market structure. It is a trend continuation model, so it's very important that for OTE to work, you have to clearly identify the higher time frame trend. Then this needs a break of structure, displacement and retracement into OTE levels. You can see the price is in a clear uptrend. So you need to identify the trend, whether it's uptrend or downtrend. And then you need to see the price making a clear break of structure in the direction of the trend with a clear displacement. Displacement is a very powerful push of the price and making the break of structure, not a simple lethargic move. And when you see a clear displacement with a break of structure, there's a high chance where there's smart money and big banks behind that move. First, what you have to do is you have to do a top-down analysis to identify the higher time frame trend. You have to find whether it's an uptrend or downtrend. And in the higher time frame, you have to look into the price swings and higher time frame key levels. And this will help you to avoid getting caught in the wrong side of the market. Because if the higher time frame is in uptrend, you need to buy. If the higher time frame is in downtrend, you need to sell. So to identify the key levels, the support and resistance levels, use higher time frames such as weekly, daily and 4-hour. Anything below this will not give you powerful key levels, and these higher time frame key levels has a better chance of respecting. Now why is it important to identify the key levels? That's because let's say if you got a higher time frame support level, so when you see the price strongly pushing away from a higher time frame support level, powerfully bouncing up, then there's a chance that smart money and big banks are buying. Then from a higher time frame resistance level, if you see the price pushing powerfully down, then behind that there's a chance the smart money and the big banks are selling. So basically, if the price is pushing from a higher time frame support level, you will usually not sell, you will start buying. Then if you see price is pushing hardly from a higher time frame resistance level, pushing down, then you will not buy, you will sell. And this way you are not looking for small intraday price fluctuations. You are focusing on significant movements where smart money and big banks are taking. So these larger trends are mainly visible on higher time frames. Then the second step is you zoom into the lower time frame charts to find out potential trading opportunities such as 1 hour, 15 minutes, 5 minutes and 1 minute or even below that. The red chart is the higher time frame, and when the higher time frame is retracing, you will try to find the end of the pullback and the beginning of next price move. What you do is you go to the lower time frame, which is marked in blue color, and then you will try to find a change of character or market structure shift in the lower time frame where you can enter into the trade. Okay, now let's look at when to buy or sell. For example, now you can see there's a clear displacement making a break of structure, and you can see the trend is an uptrend. However, you can't buy over here because the price is too high. So you need to wait for a retracement for a better price before you buy. So this retracement will happen within the dealing range. So this impulsive price move which made the displacement and the break of structure. So the bottom of it is a swing low and at the top is a swing high. So this range is what you call as a dealing range. Now what will happen is when the market gathers enough liquidity and enough buyers, then the price will start pushing higher again. So where to place our long entry in an uptrend? So if we are too early, for example, let's say you see the swing high being formed and the price start to retrace. And let's say you saw a change of character or market structure shift over here. And now if you enter based on this, you are too early. Why? Because the market and the algorithm like to trap traders early and then use those traders' stop loss as liquidity hunt, where the smart money and the algorithm will push the price down, taking the stop loss entries of the trapped traders who enter early, and they will use that as liquidity for them to get a better entry. Now, let's say if you wait till the price comes too long down, then you may miss the trade because the trade may start somewhere here and push up. So this area is a better place to enter, and we call this as the optimal trading zone. Okay, so now let's say the price is up, but you want for a retracement. But now how do you identify end of the retracement? So that is where you use the optimal trading zone. So what you do is you will draw the Fib tool from the bottom of the dealing range to the top of the dealing range, from this swing low to this swing high, which made this impulsive price move and the break of structure. But you wait first until the price start retracing down, making a swing high, and then only you draw the Fib tool. Okay, now let's look at optimal trading zone. So it is between Fib 62% and 79%. Now why do we call this as the optimal trading zone? There are three reasons for it. Number one, it gives you higher risk to reward ratio. Number two, it gives you a safe entry. Number three, it gives you a safer stop loss. Now in the next slides, we will look into these 3 points. So if you don't enter over here and if you wait till the price come down or into the optimal trading zone, and if you take your trade in Fib level 70.5, and if you are targeting your first take profit just below this swing high, it will give you around 1 to 2 risk to reward ratio. Now this is a good risk to reward ratio. Next, it gives you a safer entry. So as said earlier, if you enter too early seeing this change of character or market structure shift, there's a high chance you get stopped out. But if you wait till the price comes to the optimal trading zone, there's a high probability where it will be a safe entry. Then third point is optimal trading zone gives you a safer stop loss. When you place a trade in the optimal trading zone area, you will put your stop loss below this swing low. That is because when you have an impulsive price move up with strong displacement and breaking this swing high, and if the price is in an uptrend, the theory is the price should not go below this swing low which made this impulsive price move. Because if the price come down and go further down and below this swing low, what that means is buyers are not in control and sellers are in control. So when you place the stop loss below this swing low, it's considered as a safer stop loss. And if the price goes below this, you will be stopped out. That's not a problem because trading is a game of probability. Some of your trades will be winning, some of your trades will be losing. But when you lose, you are losing only a small amount. When you win, you will win more. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So when it comes to the optimal trading zone, we just don't take a trade based on the retracement. So we need to find an entry reason within this optimal trading zone to enter into a high probability trade. So those entry reasons are going to be various price action signals which will be covered later in this video. Okay, now let's look at the steps to follow in the ICT trading model. So as said earlier, step number 1 is we have to take the trade on the direction of the current trend. So in the higher time frame, you need to identify the market direction, meaning the trend, and the latest impulsive wave, and that has to make a break of structure with a clear displacement powerfully. Then step number 2 is you need to make sure that how much room is left before tapping into a higher time frame. So what that means is, let's say you see a break of structure, now the price is here, then let's say you are waiting for the price to come down to the optimal trade zone. But before you buy here, what you are checking is, let's say in uptrend, you are checking whether there's any higher time frame key levels such as resistance levels. And then you will check from this swing high, is there any room to push higher? In other words, is there any gap between this swing high and the higher time frame key level? So if there's a gap, that means there's room for the price to push up, because when the price reach these higher time frame key levels, there's a chance where the price can bounce from this higher time key level where price could go down. Okay, so what happens if the price has already touched a higher time frame key level? Now let's say, for example, if this higher time frame key level was here, just here where I move my mouse, that means the price has tapped it. That means over here you will see there's no room for the price to push higher because the price has already tapped it. In that case, you will not enter into a buy trade. However, if you see a gap like this, yes, you will enter into a buy trade. Then it's the exact opposite of this when it comes to a sell entry, which means in a downtrend, if the price has already touched a higher time frame key level, which is a support level, then you will make a similar decision. Then step number 3 is, you will wait for the price to make a pullback, and then you apply the Fib retracement tool from the start of the impulsive wave to the end. So what that means is, you will wait for a swing high to place first. Then when you see the price comes down, you will draw the Fib tool from this swing low into this swing high, and then you will wait for the price to come down into the OTE level. And then in this example, because it's uptrend, what you do is you will place a buy limit order in the optimal trading zone. And then you will place your stop loss a few pips or points below this swing low. And then you will place your take profit levels, the first take profit level just below this swing high. Why do you do that? Because when you enter into the trade here, and even the trade is moving in your direction, there's a chance that price might bounce from this level and come down instead of going up. So because of that, what you do is you will secure some profits as your first take profit level just a few pips or points below this, and then you will keep some part of your trade remaining to run further, expecting the price to go up. And if the price comes these levels, you will take your second take profit level at Fib minus 50, third take profit at Fib minus 100, and then fourth take profit at Fib minus 150, and the fifth at minus 200. Okay, now let's look at this applied to a downtrend. So this is in a downtrend, you need to see a clear impulsive move down, making a break of structure with powerful displacement, and then you need to wait until a swing low is formed. And when you see the price start retracing, you draw your Fib tool from this swing high to this swing low, wait for the price to retrace into the optimal trading zone, and then you will place a sell limit order, and then you will place your first take profit target just few pips or points above this swing low, and second take profit and remaining take profit levels. So this is a bullish candlestick example for an optimal trade entry. So this is an example for a bearish trade. Okay, now let's look at identifying if the trend continues or reverse. Now why is this important? Because optimal trade entry is a trend continuation model. So for example, in an uptrend, when the price is making higher highs and higher lows, you are expecting the price to continue that. So for example, if the price make an impulsive price move up, making a break of structure and making a swing high, then what you expect is the price to retrace into optimal trading zone and to go further up. Now what happens if instead of doing that, if the price goes further down below this swing low? So if this is your higher time frame, what that means is it's making a change of character or market structure shift in the higher time frame. What that means is there's a chance now that the higher time frame trend is changing from uptrend into a downtrend. What that shows is that buyers are no longer in control, and it might now change into a downtrend. Now why is it important to know this? That is because in optimal trade entries, we take the trade in the direction of the trend. So if it's in uptrend, you will take buy entries. But if you see the trend is changing, now you will not take a buy entry. Instead of that, what you will do now is you are checking if the trend is changing into a downtrend, and with some extra confluences, you will now start selling. We will see that in real chart examples after this. So the question is, can the optimal trade entry be this simple? The answer is yes. Simplicity is the key in trading. Your trading plan must be simple, straightforward with mechanical rules. Okay, now let's look at Fib settings for ICT OTE. So in your trading view charts, go to the Fibonacci tool, just type these settings exactly as this. Okay, now let's look at what times and markets to trade OTE. So if you are trading US indexes or stocks, then you trade only between New York time 9:30 a.m. to 11 a.m. If you are trading Forex, then you trade London session 2 a.m. to 5 a.m. New York time, which is the London morning session, and the New York session 8:30 a.m. to 11 a.m. So keep in mind, we don't take any optimal trade entry outside these time periods. These are the time periods which will give you high profitable setups. Okay, now let's look at higher time frames and lower time frames related to OTE. So the higher time frames depends on your style of trading. So if you are a swing trader, which means if you are taking trades and holding it for few days or let's say a couple of weeks, then your higher time frames can be the weekly, daily or the 4-hour. But if you are a day trader, intraday trader, which means let's say you start trading at 9:30 and you enter into a trade, but you take profit and exit in few hours, then your higher time frames can be 4-hour, 1 hour or even 15 minutes. If you are a scalper means you enter into a trade and you just stay in the trade only for a short time, like 1 minute or 10 minutes and take profits and exit, then your higher time frame can be 5 minutes. Now keep in mind, even if you are an intraday trader, you will use daily and 4-hour, but what I'm telling here is the higher time frame depends on the style of trading, but you can combine this. So for example, as an intraday trader, if the daily is in an uptrend, then you can go to the 15 minute and look for a 15-minute uptrend and look for optimal trade entries. Then for the lower time frames, you can use 1 hour, 15 minutes, 5 minutes, 3 minutes, 1 minute or even 30 seconds and look for this change of characters or market structure shifts. If you are a scalper, your total time frames can be 15 or if not, your higher time frame can be 5 minutes and your lower time may be 1 minute or 30 seconds. Okay, now let's look at variations and add-ons to improve the basic OTE. Okay, so then this is the golden part. So the accuracy and the win rate of the basic optimal trade entry can be increased by adding these variations. So here we have listed 6 variations. There are more into this. The first one is combining OTE with multi-time frame market structure and change of characters or market structure shifts. Then another model is to combine OTE with key levels and institutional price levels and big figures. Model number 3 is to combine OTE with liquidity sweeps and targeting liquidity. Model number 4 is combining OTE with daily bias. Model number 5 is combining OTE with daily bias based on price targeting liquidity. Model number 6 is combining OTE aiming for previous day's highs and lows. Now these models will improve the accuracy and win rate of the basic OTE and will give you high profits. So when you are trading, depending on the situation, you may apply one of these models. So we will discuss and demonstrate real trade examples and setups of above models 1 to 6 with take profits and winning trades in the next videos after this, so you can copy them and start trading them in live markets. So it's a remarkable 1 to 10 risk to reward trade profit, which makes a 15-minute market structure shift. So you will place a buy limit order over here, 1 minute market structure shift. There's another possible trade entry here where you can stop loss below this swing low, because this is the hit our next take profit level. You have got a large profit has reached 1 to 8.45 trade profit. We got 2 trades here. So in total, it's 1 to 18 remarkable risk to reward trade based on optimal trade entry concepts. Okay, so soon after this video, have a look at the next OTE real chart examples and trade setup videos we have published, so you can copy them and start trading the live markets. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's the end of the video and we will see you in another video.